Welcome, Gordon. Thanks for joining us today. Another brilliant set of results, delivering a strong performance across the group. So, can you talk us through the financial highlights?
Yes, well, about 4 weeks ago, we announced to the market that position had come out very well this year. That resulted in an upgrade of about 1.5 million by the analysts for this year and 1 million a year in subsequent years. So that's good, shows the progressive growth in services. Also, we ended the year with over 20 million of cash in the bank, drove the dividend up by another 3%, which we think is important for shareholders. So yes, we've had a really good year, but also more importantly, a really positive outlook moving forward.
So, the services sector has had a fantastic period, reporting a fourth consecutive year of growth. Can you explain what has driven this level of growth and what new frameworks you are working on?
Yeah, so we always say to everyone there's two parts to the services sector. So one is the big mega projects. So this is, for instance, HS2, and we're working at Sizewell. So they've been very successful. We're working on a number of potentials as well, which we talked about at the half year. Those are Lower Thames Crossing, looking at the reservoirs for the water companies. So those are the big megas, and we're well positioned for those. And then below that sits the smaller framework contracts. We have over 65 small framework contracts. And again, we were successful in winning new ones, for example, with Infinium and Thalia, which is in the energy space, but also some framework contracts with Northumbrian Water, with Yorkshire Water, and even with Morrison's. So it's much smaller, but adding to that underpin of solid quality contract.
So, it's fair to say HRMS has experienced a turnaround since the previous financial year. What has changed?
Yes, well, what we always say with HRMS, remember that drives the dividend every year back to the UK. And again, it did it last year and we'll do it again this year. When you look at the business itself, it's obviously in a challenging sector. So we recycle dust from the steel plants across Europe. So really the key drivers have been we've been able to drive gate fees up. We've reduced the cost of the raw materials. So that has created a significant turnaround. We've also benefited slightly that zinc price has recovered. So people who follow us will know that they're the three big drivers in that business. The thing that's probably not kicked it as far as we would have liked is the fact that pig iron prices have still stayed relatively at the same level as previous. So they haven't moved up. I think that's understandable in what's been happening with tariffs, etc., in the steel sector. But overall, we're very happy with the turnaround. And this year is all about moving it forward again. So again, looking to increase gate fees, reducing raw material costs, hopefully getting better zinc prices, and hopefully this year we'll start to see pig iron prices moving back up. So very happy with the business, and again, it's important it keeps repatriating that dividend back to the UK, which it will do again this year. So nice and solid. We will eventually crystallize an event there, but at the moment the time's not right with all the uncertainty in the steel sector.
So, looking forward, what is the outlook for the business?
Well, I'm very pleased where the business sits. If you think about it, we always talk about the three pillars. So they're supported by the fact that we have over 20 million of cash in the bank. So that's solid. We have no bank borrowings. So when you look at those three pillars, services in a great position. This is all about big infrastructure projects. So we're well positioned, as I mentioned earlier, for Sizewell moving forward, Lower Thames Crossing, reservoir work, and even the third runway at Heathrow has a potential for us. Alongside that, we will continue to grow the smaller services contracts, and we did announce the appointment of a COO, Simon, who's come on board to help drive the services business. So I think over the next few years, you'll see services growing steadily in a controlled manner, but definitely growing significantly. Property, we've always said, is all about releasing the cash from the balance sheet. So at the moment, there's 80 million roughly tied up there, and taking that down to 20, so throwing off that 60 million. And we're on course to deliver that alongside the sale of the renewable assets. So positive outlook there. And then finally in Germany, as I said earlier, it's been a challenging time in Europe, but it's still, through its trading business, is able to return this 7 million dividend back to the UK. We'll continue to do that. We'll continue to improve the position of the business. and then eventually we will crystallize an event to return significant value back to the shareholders. So when you look at all three, I think we're in a good place, good position, haven't been impacted by the tariffs in any great degree, except for what's happened in Germany. So I think we're in a great position, and I'm looking forward to updating you in 6 months' time, which I think there'll be a lot of positive developments.